Hey guys, this is Karthikeya Kantwal from Apex FinServe and we'll be going through the same daily routine again. We'll be discussing 5 trades for tomorrow's trading session along with the brief outlook on the indices Nifty and Bank Nifty using their charts and the option chain. And of course, the recently started commodities and currencies too. But before we start for the trades for tomorrow's trading session, a collective roundup of the trades that we had for today. Out of the 5 equity trades, we had 2 triggers and 2 targets, which were IndusInd Bank and Apollo Hospitals. So again, if you consider the equity section, a 100% accuracy, the green streak lives. Whereas for the commodities, crude did not trigger as of now, and silver buy was triggered at 52,750, and it is roughly about 300 points running in green as of now, just shy of target, about 100 or so odd points. Let's see how that goes. Now, starting with the trades for tomorrow's session, the first script that we have is SRT. Now SRT, I told you guys yesterday, lower low lower high formation was in the making, but the lower low part of it was taken care of in the yesterday's movement. That happened today. This retracement, as you might call it, is almost the complete length of the previous recent swing leg. So this is more of a probable reversal than a deep retracement when considering the immediate swings. So the stance on that is the stance on SRT for now is not to sell at rises but to buy above swing highs. So we'll be going long above 685, which is the previous resistance as well as the swing high. So we'll be initiating longs only above 685 with the stop loss going at 676, 678 and the ideal target of 1% as usual. Moving on to the second script that we have, Apollo Hospitals. Now Apollo Hospitals, if you look at this today's movement in particular, if you look at these 2 red candles, so we have a big sudden sell-off pressure followed by a consolidation, and if you draw a small trend line over here, so you'll have a small pennant like formation, and a pennant ideally, the extent of the movement that comes after the pennant, or even a flag if it forms tomorrow, the movement that comes after that is supposed to mimic the length of the pole. So we'll be taking a long position once all of that unwinds. So we are going for a long position at 1400. It is pretty conservative. I'll tell you why at the end, where we'll be going for longs at 1400 with the stop loss going at 1385 and the targets at 1% from your entry. Moving on to the third trade that we have, Just Dial. Again, it had a downward channel in the making. I told you guys yesterday it might have come back in the channel, but it has not come back in the channel. In fact, it started going up again. So if you look at this, if you start from this point, it can make a high low formation at this point of time. It can, I can't say it's going to, but it might. So we are going to go for a long position above the break of the swing high and the resistance point, which happens to be at 380, the stop loss going at 375 and the ideal targets at 1% again. Moving on to the next strip, we have PEL. Now PEL, sadly the selling pressure has completely worn off. Every time it is going up, it is falling harder on its face. So we'll be going for a short position alongside the structure formation. It has made a lower low. Hopefully this will be a lower high somewhere, but we won't be going for an aggressive short at the high point, but instead we'll be going for a confirmed short position when the previous low breaks. So we'll be taking a short position only under 355 and the stop loss going at sell only under 1355, not 355, 1355, and the stop loss going above it near the previous high around today's closing, 1375 levels, the ideal targets being 1%. Moving on to the last script that we have, IndusInd Bank. IndusInd Bank, it has made a low, but again same as SRT transfer, if you look at this upward movement, it is visibly more than 50% of the corrective length, which ideally should have been, but it's more than that. So it is a plausible reversal more than a deep retracement of the downwards move. So we'll be going for a long position only above 525 with the stop loss going at 517 and the ideal targets at 1%. Now there's a reason why not all but rather most of the equity trades that we have today are either buy above levels or sell under levels and not exactly aggressive entries at the levels. Now the reason for that is we have had a particularly good run so far. Monday through Thursday we have had a wonderful green streak on equity. So I think it's more important to have a balanced trading week rather than to go all out and out on every single trading session. If you have made some money, it's pretty wise to ensure that it stays with you at the end of the week rather than have one bad day take all of it away from you. Moving on to the indices that we have. So starting with Nifty. Now Nifty seems to be pulling back again and again into the range from 10,700 to 10,800. It had a very strong surge in buying pressure today in the last hour or so, and it is again back in the range. Now again, since it is in a range, it makes sense to go for ping pong trades. Take longs either 10,700, take shorts near 10,800, 10,820. It makes sense for intraday trading, quick scalps, 20, 30, 40 points. That's it. It is it gives you fairly nice opportunities. But if you are a conservative trader, wait for proper interaction near these zones and wait for a breakout of either of these zones. Now 10,800, it might be broken on the upside. We don't have confirmation from the option chain as of now because it is a fresh expiry, so the writers are not all present. So we don't have a strong confirmation from there, but just going by the number of times it has interacted at that level, and even after a downside break, it has not it has not went any further downside. It has not seen any further downside. So it seems pretty adamant on breaking the upside of the range. So stay particularly vigilant near the 10,800, 10,820 levels. Now when we go to the option chain for Nifty, now this is the fresh expiry again, 23rd July. So option chain isn't exactly at its optimal weightage or participation. So we have your immediate resistance at 10,800 with almost 400,000 added contracts, and significant at 11,000 with 700,000 plus added contracts. For the support side of things, we have 10,700, literally immediate support with 500,000 added contracts, and important support at 10,600 with 850,000 total added contracts. Now this there are no calls or puts aggressively written today as of today. Even after the expiry change, there is no particular side, either calls or puts, where the writers have strongly come together. It is pretty balanced. Even when we look at the PCR, so the PCR for volume, it comes to be at 0.97. So the buyers who have taken positions, they are still pretty bearish, but let's see. The PCR was slightly bearish yesterday as well, but clearly it was not a buyer's expiry today. So let's see how that goes tomorrow. Moving on to the next index, we have Bank Nifty. Bank Nifty, I would prefer to take trades on break of these ranges, 21,200 and 21,800. It is going to decide the short-term trend for Bank Nifty, because it has made no clear structural formation on either 15 minutes, 30 minutes on, or even 1 hour. So there is no solid bias as such. When we take the help of option chain for Bank Nifty chart, now for Bank Nifty, option chain is particularly dry on either side except for the big strikes, 500 and 1000 strikes. We don't have much participation, but still, for namesake, we have 21,600 at immediate resistance with 35,000 added open interest, and significant resistance at 22,000 with 166,000 total added contracts. For the support side of things, we have 21,500 with 56,000 added contracts and 21,000 with 195,000 total standing. Not total standing, but added open contracts. Total standing is 292,000. For Bank Nifty, personally, I would suggest take trades only at these two levels. It doesn't make sense to uselessly enter a position in the middle of this range. But we'll see how that goes tomorrow. Now moving on to so starting with silver, where we do have a running position as of now. So silver, we had a long at 52,750 with the stop loss going at 52,250 and the target of 500 points at 53,250. It still seems to be at 53,500. Once it crosses 53,100, I expect it to show some kind of quick movement, but as of now we are sitting in 300 points green. So we have trailed the stop loss, so the risk is pretty much negligible. Let's see how that goes. For tomorrow, we don't have a bias as of now, as I tell you guys every day, because the market is open, so we can't really plan a trade so well in advance so as to trigger tomorrow evening. So we'll give you those levels tomorrow in the morning before the market opens. For crude, again, I told you guys to watch out for this level. yesterday, 3080 levels, and it has interacted with these levels today, and it has given pretty nice trading opportunities. Now you can see it is still interacting with the levels, it is still interacting with 3080 price levels, and it seems to be trying hard to break on the upside. Now we'll see how that goes. You could have actually predicted in a way, or at least seen this move coming, because every time it was trying to come down, the dips were being bought very strongly along lower wicks, so buying pressure was in plenty. Break of this range should show a good move, as I told you guys yesterday as well. Let's see how this goes. We have a sell position on crude, I think, at 3150. Long way to be triggered. I do not think it will be triggered tonight. Let's see what we'll get for tomorrow. When the market closes, we'll look into it. For Gbp Inr, I told you guys to take trades on the break of this range, either the 94.750 or 95 range that it was in, and it had broken the range on the downside. It had tried coming up again, it formed a lower high, and then it fell flat on its face. So even with basic price action, these sort of moves, they are easily tradable. You could have easily caught 300-400 pips on the downside movement without a sweat. So for tomorrow, again, you have a good demand zone at roughly 94.3 levels, and on the upside I would suggest you have a small supply at 94.55. so we'll see where exactly do we take the trade. The optimal point for entries, you'll need to check out the channel for that tomorrow morning. For USD INR, we have a lot of zones. Honestly, there's a lot of zones, so I would personally advise you to take trades only on breakout of these two zones, either the 75.3 levels or the 75.25 levels. So this roughly 1000 pip range is kind of sideways, or it is it is going to stop the momentum from carrying over to either side. So trade once you have a convincing breakout on either side. Now let's see silver once again. Yeah, it is still at 53050. Let's see if it hits target. If it does, we'll notify you guys in the channel. So this is all that we had for tonight, guys. These are all the charts that we had to discuss. Now this is the last video for this week's trading sessions. The weekend is coming, so if you have any suggestions on what videos we should make for the weekend, or what particular content you'd like to see presented on this channel, let us know in the comments below. It is the weekend, we have a day or two to create some content, so we'll work on that, and if possible we'll record it and put it out for you guys to watch. Thank you so much for watching, and as always, if you want any of these charts, the option chain analysis for tomorrow, the watch list trades, all of these things, they are posted on the Apex FinServe channel on Telegram @Apex FinServe, the link of which is going to be there in the description. So be sure to be a part of the channel as well for all the regular updates. This is all that we have for tonight, guys. Thank you so much for watching. Have a good night. Bye.